What's happening, guys? Welcome back to my channel. So I just thought I'll give you just a little tip on Friday just to help you out moving forward to next week in terms of your higher time frame analysis. Now, a lot of people find it very difficult to figure out how to find confluence with their key time frames and their entry time frames. Now, one tip that I'm going to give you as we move on in this lesson is that you only need 3 time frames. Your first time frame you're going to use as your key time frame to identify structure. Your second time frame is going to be used to help you identify the behavior of what is happening within your key time frame. And finally, you're going to have your entry time frame, which is going to give you confluence with your behavioral time frame. So that being said, when we look at this chart, the first thing that we can see on this pair is that this market structure is clearly down. Now, most people will look at this and say to themselves, well, now it's time for me to look for selling opportunities. But what you have to understand is if we're taking our analysis from the weekly time frame, then within one weekly candle, we have 5 days worth of information. When we go down to the daily time frame, we have 5 days. And within one daily candle, we have 24 hours worth of information that can be broken down to the 3 hour, 2 hour, 1 hour, 30-minute, or whatever your entry time frame is. So we're going to find a lot of confusion there with that being said. Firstly, if we're looking for sales on this pair and we move down to, let's say, our entry time frame, for this example, we'll use weekly, daily, and 1 hour. What is the first thing you can see on this pair? I'll give you a second to think about this. What is the first thing you can see? Clear uptrend. What are you selling into? Well, that's going to be difficult because if the higher time frame analysis is sells, but your entry time frame is buys, then how are you going to find confluence? Well, it's not really going to work, is it? So let's move back to the weekly. How do we digest this information? Well, let's draw a rough trend line here. Now, I don't support using trend lines, but we'll just use this to identify where the most touches have been on this price action, okay? So let's use this. We have 3 points here. We have a structural high, lower low, lower high, lower low, lower high, lower low. And now what are we expecting the next swing to be? A potential lower high of the previous structure. So if we plan to sell this structure based on this key time frame analysis, what should we technically be waiting for? We should be waiting for price to come back to this key level before we look for sales. What then is the point in scaling down to your daily, your 4 hour, your 1 hour, and your 30-minute going to do for you when you're looking for sales, but the structures of these other time frames are clearly up? Well, what we have to do is not take into account the information that we see here in terms of a downtrend. We need to identify the phase of this market. So if the structure of this market is a structural high, lower low, lower high, lower low, lower high, lower low, this is your push phase, and now we're seeing an exhaustion phase. So what do we want to do with this information? Well, firstly, we're going to identify that price may come back to this level, to make a lower low. How do we trade it? Well, what we need to take into account is the current swing that is happening right now, which is this time frame. This is an exhaustion phase. So when we go down to our behavioral time frame, we can see this is clearly in an uptrend. We see a double bottom of this structure, a break of the previous high, a higher high of this structure, a higher low of this structure, a higher high of this structure. We are not planning to use any support or resistance, even if the higher time frame tells us sells, because this swing is buys. So what we need to be waiting for is for price now to create a swing on this pair, to create a higher low, before we then get back to the key level, which is the trend line on the highest time frame. So when we go down to our hourly time frame, what we can clearly see is much more information, and this will help us to identify how we can enter the markets. So now if we take the current swing on the weekly, we recognize this as a uptrend. We then start to work with this structure as a structural low, high, higher low, high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. And what's our plan? We're going to continue to buy this structure on this market until price gets back to that trend line. So are we looking to now start placing support and resistance here, 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 and start trying to short the market? No, because we know that our weekly time frame has one objective: to get back to that key level that it wants to get back to, which is here. Now, if the market structure decides now to say, well, I'm not going to come back to this level, I'm going to create a lower high below this previous structure, then what you need to wait for is for this weekly candle to close. You need to start seeing the momentum of the next candle open, because what structure will this create on the daily? Well, this will start to create lower highs and lower lows. And then how would this look on your hourly time frame? Well, exactly the same, but clearer entries, which means you can get tighter entries, smaller stop losses, and target bigger targets. Simple example. So just remember this. Even if the weekly time frame is telling you structures down,